see here. All right, great. We are live. This is actually really exciting, Bob. This is kind of cool. This is the inaugural podcast, videocast, called the Mortgage Podcast, which is intended. Bob reached out to me to do a podcast regarding CMBs, the mortgage industry, policy, legislation, all things Mortgage Bankers Association, the things that the MBA wants to get out. We want to be able to help them get out the message. And to leverage CMBs, which I am a new CMB myself, to get the word out as to what's going on, in mortgage, housing, and real estate. And Bob, you've been a huge, not just a huge figure. I mean, it goes without saying. I mean, a lot of us became CMBs because of your leadership and just going through a very rigorous process because of your voice behind what it means to be a CMB. So this is great. I think this is a good, innovative idea.
Well, thank you, Rick. Certainly I appreciate it. Love hearing the words. It's kind of humbling when you think you go out and you advocate and you do discussions and you lead, rooms in direction and different things, that you actually do make as much of an impact. It's one of the things I always say, you're a leader, not always for good reasons, but you have that opportunity to decide what you want to do. But, yeah, I know we wanted to talk about our CMB role. Certainly, I'm the self-appointed CMB evangelist, bringing more people to, professionals to the understanding of what is a CMB, what it means, and what that journey is. Because earning your CMB, getting the pin, getting my, plaques on the wall back here, that's not the end of it. It's something that, for me, started when I heard Griff Straw talked to an Ohio Mortgage Bankers Conference, probably 2010, for me. And then just could I ever get to that point? And I didn't strive for the CMB because I didn't want it, just for the pin or just for the plaque on the wall, or just then I would be able to do things. It was because I was already doing advocacy. And it was, I want to continue and learn more from a group that really knows, this and is so very diverse, that community. And it took me a while. I didn't get mine until 2016, even though I didn't know that.
The guy who, there was a gentleman who proctored my exam, and he got the CMB, I think in 1986 or 1987. And when you get the CMB, it's really interesting for me as somebody who just received mine. You begin to realize sort of the scope and the depth of the lineage of people who've been part of this program for as long as it has.
Yeah.
How far back? When was the first CMB ceremony, or when did they create this program?
I think my year as chair was the 52nd year of the CMB Society.
Oh, wow.
It was when Val, Len, that time frame there. And it's interesting because we do have some history of it online. Anyway, let me first let everybody know that doesn't know, sorry. My paying job, because I have a paying job and then a few non-paying things that, certainly, are helpful to me in our industry. But I'm the director of government affairs for Wiener Brodsky Kiter law firm in DC. We're a mortgage specific. They like to call it a boutique. We're under 50 attorneys. I think we're in the 30s. I work for Mitch Kiter, Jim Brodsky, Harvey Wiener, three great guys, all former HUD folks, all still very engaged in the business. I think the firm's 40 years old. But although I'm based in a DC office, I live in the Tampa area. I was in the mortgage world for 24 years when I got appointed the deputy superintendent of Ohio. And that's actually what sidetracked me, because once I became deputy superintendent and I did those 4 years while I was working towards the CMB, I had to kind of take a pause. And then my sponsor, when I made the move back out, Todd Potter, picked it right back up. When are we going to go? When are you going to go? I know you're working on this before. And I got it, that first year in 2016, after I returned to the good side of the business. I don't think there's a bad side, it's the place where, working for a law firm, not being an attorney. But, and when I did mine, it was an online exam. And then when I did the oral panel, you flew to DC. I flew to DC in the morning, did my test early afternoon, and then flew home that night with the pin. And it's been a great community for me. The people and the knowledge that I've learned from the other CMBs.
Yeah.
It is truly awareness. And it really does. I mean, get to meet people. I mean, we cross paths, but we don't really speak a lot. You say hi to folks, but when you get the opportunity, you're in the room, and you raise your hand and say, yeah, I would like to work my way sometime to be into leadership. And it took me 3 years of, discussions with that group about the opportunity to do it. Who was the person who first told you about it and made you get that, I want to go through this? Because we both know, having done it and you just finishing it, it's not easy to get. It's not.
So Meg from TransUnion, had told me about it. And that was sort of, Matt Van Fossen. I'd watched Matt Van Fossen and CHLA. I think he was on the board of CHLA at the time. And so I think that seeing those guys and the leadership roles that they had in engaging with Fannie and Freddie and engaging with industry topics, I was just really impressed by. I was impressed by just how acute their knowledge was, about the business. But I think it was a culmination of that connection combined with Meg finally saying, "Hey, you should totally do it. Like you've spoken on enough sort of MBA stages and I'm sort of, visible enough in the industry that you should really take this step seriously." And to be honest, I said this in my interview. I mean, I didn't aspire to be a CMB. It wasn't something, I didn't really appreciate it until I got into the process. When I got into the process and was exposed to the rigor and exposed to sort of, as I was telling one person, you can sort of skate through the mortgage industry and kind of focus on your core areas of expertise and really be super ignorant about the industry at large and how it works, pretty easily. And a lot of people do it, and what I like about the CMB process is that it really does round out your education about mortgage in the industry. And so you can't skirt around it. Like it kind of hits you with a 2x4 and you really have to study it, and then be tested on it. And then to have the skills to be able to talk about it, through the process. So, trust me, it was definitely, I would say it was in the preparation and organizing your study guide, that really challenged me the most. Cause I had many 3-4 in the morning nights, during the course of preparing for the exam that I said to myself, like, what am I doing? I'm 52 years old. Like, why am I I have my doctorate in finance. Like, I've been in the business 25 years. Why do I need to do this to myself now? And to be honest, though, I didn't want to let Meg down. I didn't want to let others down. I didn't want to let people in the MBA down. I didn't want them to say like, he just sort of wants the vanity in a self-imposed soapbox without actually having to earn it. That was something in the back of my mind. And so I'm so glad that I stuck it through, and I'm so glad that I just aggressively tackled it as I typically do. Because now there is that sense of accomplishment, number one, and then the community that you have with other mortgage professionals that are really sort of committed to the craft and the business at large. Yeah.
And you just being new to it, you're just really getting, because you earned yours in, what was it, September?
Correct. Yeah.
Yeah. Cause I remember, we gave you the pin, at the New England Mortgage Bankers, wasn't it? Or
that's correct. That's right.
Yeah.
That's right.
So I remember that. I mean, and that's one of the things I get a little tear every time I get to do that, just because you understand what it was like when you got to that point. Because when the people did my oral panel, and then I came back into the room afterwards, and I waited a good 15 minutes. And when I walked back in, they all had stone faces. They all, and I knew the first question they give me was a layup for me. And then, we got a couple of tough ones. They asked me about, Fannie and Freddie had just gone into, NBA come out with their first white paper on what to do with, conservatorship. And it was kind of that discussion there. And they asked me about it, and I knew this deep, and it was kind of hard. I wasn't sure. So I wasn't sure when they, but then when they say, yes, you got it, it was like, oh my gosh, I can't believe what, this. And then great. What's it mean now? Where do you take it from now? So that's, a number of things that you say there. Yes, it is a tough path. It's difficult. It's 6 1-hour, written exams around the 6 things. And it really exposes how wide our industry is from, what we do pre ever meeting a customer all the way through when somebody pays off, all the different challenges of life, and just the faith and not disappointing our industry. Because I always say we don't finance houses. They're not in it. We're not building, a widget. We finance homes. We represent the families that are going to live in those homes. Generally, even if it's an investment property, there's going to be a family that rents it, whether it's a 1-person, 2-person, partners, 5, mixed generational, whatever it is. We can't let those people down. And you mentioned not letting the people you knew that were helping you on your CMB journey. That doesn't go away. We still need you to act that way. We need you to be a leader for our industry, to use your voice. And that's when you asked me a couple of questions. And I said, you'd be a great person to get involved with this, because the more people we can hear about what our industry does and why we do it and what we need to focus on moving forward, the people that get it, we need them to get in the fold. I did Matthew Van Fossen's oral panel. Probably, and I say it all the time, he's heard it before, one of the best I've ever done. He didn't need the CMB to do what he's doing, but we need him to be part of our group because he raises our level and what our expectations are for each other and for our industry. I love the fact that Bob Brooksmith, who leads MBA, is a CMB, a fierce advocate. He got the E. Michael Rosser Award this year for outstanding CMB. That Brian View, Misbo, CMB, Bill Cosgrove, who's, Union Home, just became minority owner of the Tampa Bay Rays, that CMBs are the leaders and the people out there. We need our voices, our efforts, our advocacy to help keep our industry in the right. And certainly with the challenging times we have now with the impulsive, and guidance that seems to change at different times and trying to undo a lot of things.
No, I think, Bob, look, there's no question that the CMB is a distinction. And I think it's a qualifier. It should be a qualifier to some degree for MBA leadership to some degree. I'm not sure if maybe it's an implicit qualifier, or at least it implicitly gives you an advantage of other people who may not have it. If and when the MBA is looking for different leadership roles and positions, with the respective leader. Look, I think this is a great forum to be able to add, to be able to interview and invite other CMBs to this platform to be able to talk about what's confronting mortgage housing and real estate. What would you say, what are the big wins? There's, that the MBA had that we think is important for the industry to know and to really keep an eye on. And then after we sort of talk about that, I wouldn't mind talking about next year and what you think the MBA, what their priorities are or what they should be, that would have the most impact on housing.
I mean, certainly the relationship that MBA has, I think, since 2024 really has demonstrated that MBA, that the leaders, the advocates, the lobbyists that we have, that we employ, in the Senate and the House and across the agencies really show we're the adult in the room. I love the work, that Bill Kilmer, Pete Mills are doing for us, the state folks, Liz Facemeyer, William Cooper, Pete Mills, those groups, because we need to be a little bit of everywhere. And a lot of the wins I see for this year were, we held off negative challenges that could have come on our industry, especially with different things changing with the tax laws and coming around. And the direction around, I know APOR's in the news. That's been calculated by CFPB. Is that going to continue? Not going to continue? And it sounds like, that NBA is right at that table meeting with the CFPB folks, talking about how that's going to move forward so that the industry can rely upon reasonable numbers. And if it, they stop doing it, just giving somebody a calculation doesn't ensure errors. And, there's always that question down the side about legal process. If somebody makes a mistake, known or should have been known, what that could be liability wise. So that's number one. I think just the ability to work with this administration as things are going up, and at times, no, we're not going to do something different with Fannie and Freddie on Friday and then Monday morning. No, we're going to do an IPO. And even though it can't be an IPO because you can already go buy stock right now, you could buy stock. Now, granted, they could reauthorize and issue new stock and do whatever they want to do, but whatever happens with Fannie and Freddie, it can't impact rates and it can't impact our 30-year fixed rate mortgage. We need stability. I would love to see the CFPB sit around and stay around in some format. Not that it needs to be 1,600 people like it was under the last administration. Not that we need to do these wide swings of, overturn administrative policies and, expand rules and expand, implicit and other authority that they think they had under the last administration, but then to enforce on things that aren't written in statute. And yes, I think there needs to be an official on the field when you play a football game. You can see I was a high school and a college football official. I think there needs to be police so that we don't, as the ethical mortgage bankers of the world, don't have to compete. Those entities and those people are in it for a buck, just trying to rip somebody off. Because, and if they openly are doing it and get away with it, whether it's a short term or otherwise, it puts a stain on our industry. It hurts us. And I mean, I teach school of mortgage banking classes, and I always lead each one. And I say, I need you to get this right. I need you to understand what your responsibilities are, because if you do something wrong, it hurts all of us. If you hurt a family, it hurts us. Foreclosures, the F word in the business, they're going to happen, but we can prevent many things in our business if we do it right, if we communicate right, if we just act in the way that we should.
It raises a good point about the CFPB. I mean, I think that I think we have to be careful to some degree with what we wish for, right? When people wish for the demise of the CFPB, it does create a tremendous amount of complexity and cost to disseminate so many of the rulemaking and interpretations of the rules and the application and enforcement of the rules across 52 different jurisdictions. When you look at, or even just the states and territories between Puerto Rico and Guam and so on. I think having an industry regulator, an industry partner to be able to implement and exercise the right thing to do. The question is, I remember speaking at a conference. The question is really more of a philosophical one. Can a regulator be an industry partner, right? In my view, industry regulators should be guides, unambiguous guides to help industry partners or industry players obey by the rules and to be able to accomplish the very sort of public goods that the various industries aim to do, and that the various regulators aim to enforce. Right? If it's so ambiguous, it becomes so adversarial and so counterproductive. It becomes difficult to actually look at them as anything but an adversary. But I do think that it is. But mortgage professionals, I think we have to be very careful what we wish for. I think having a very proactive, clear, decisive guide to enable players who want to do the right thing to actually do the right thing will only isolate those who don't even more so. The more vague and ambiguous the CFPB is, the more it blends in the bad actors with the good ones, because nobody knows what to do. Nobody knows like how LO comp is really supposed to be administered out in the field. And what is a point bank versus a a compensation bucket and how that gets assigned from bucket to bucket, to be able to be more competitive on one hand and compliant with LO comp rules and Dodd-Frank on the other, right? And when you're kind of flying blind and you're essentially only getting penalized for trying to do the right thing, but just maybe like, to make your analogy, it's hard to know. It's hard to play baseball if you don't know where the lines are.
Right.
What's
foul and what's fair.
Yeah. And that's where it becomes, very difficult. But, I do think the CMB having industry voices advocate for, I think, quite frankly, CMBs could be really competent guides on behalf of regulators, quite frankly, to be able to help, educate, this is what's fair and this is what's foul, and to be able to help lead organizations, down the right path. I don't know if there's ever been any thought around any kind of collaboration with state at the legislative or the regulatory level, state by state, and to say, like, look, you have CMBs in your state that can work with you to help drive enforcement in your local jurisdictions.
I actually was one of the things that I ran on when I was working through to become get into the leadership of the CMB Society. I wanted to get CMBs more involved in states, and to get the state Mortgage Banker Association, whatever associations that are, to recognize the designations. Yeah, I've got a CMB here, but it could be AMP, it could be CRMCP, it could, whatever that is. That tells you somebody who's dedicated a little bit more, not to just themselves, but to advancement of the industry. Those are the people that you need to hold close to your association and to get involved when you had an advocacy day in your state. If there's a regional issue, more of us, I'm an ambassador for MBA for Florida. I work with the state and local work the state and local mortgage banker committees, in the stuff through MBA and those conferences that the day before the advocacy conference. I did a panel with CMBs for them and offered, hey, you want me to come out and do this? We'll talk about CMB. We'll get CMBs in your state to come up on the stage, talk about what keeps us up at night. What are the challenges in state, regionally, or nationally, and do that. And those are some of the best panels that come about. We did one at Acima this year. I had 4 CMBs on the panel, and they all knew one area where it was going to come. And I teased them when we got on stage. By the way, this is now the advanced, version of your oral panel when you got your CMB. I know the questions, where we're going, but it worked well. There's nothing hidden there. They knew the topics, and to get the discussion of one person is the, more of an expert on it, but we all know it, and just to get the different perspectives. Going back to your comments about the CFPB real quick.
Yeah.
None of our industry does it exactly the same way. So we're going to have a question about interpretations. So there's always going to be a need to answer, does this, or, what I want to do, or whatever I've evolved to with my changing business model, does it still fit under this rule, or does it need to be a change or a guidance or interpretation to help me understand? And if there's nobody there, there's nobody to answer those questions. There's also nobody to undo some of the bad regulation that's been out there or evolve it. You brought up LO comp. There needs to be some edits. There need to be some changes there. It doesn't mean it needs to be wide open and go back to point banks and go back to steering. But in reality, ATRQM and all the things that we put out there, TRID, disclosures and those requirements, it's really eliminated a lot of the challenges that were the emphasis for why we have LO comp. Because when I was deputy superintendent in Ohio, I saw the person who, application's got a good faith and it said this, 2 weeks before, they get one here, and then they show up at closing and all those numbers changed. Everything went up, and all of a sudden the entity that, the mortgage banker, mortgage broker, whatever, all of a sudden they're now getting, extra points, extra fees, and it's whatever. And you get complaints from inside mortgage, entities. And they were just like, yeah, my boss just says, client's getting $10,000 back. They don't need that much. Let's take a couple thousand of it. That's the stuff that puts a stain on us. But that's been done away with because of Dodd-Frank and all the rules that have worked under, requiring CFPB to do, update TILA RESPA, put those things together with the TRID document, get rid of the good faith, improve it and make it to where we are today. It doesn't need to be, you can't. One of the things when I was a state regulator, I always told them this when we would get into the big rooms. I'd say, as a football official, you cannot throw the flag every time you see somebody line up a little offside or whatever. In fact, the question that they asked me, they learned I was a football official and I was doing college stuff, and they said, okay, so what if you had to enforce something against a mortgage company in Ohio that's one of your friends, what would you do? And I said, it's really be like, it's fourth quarter of the game, the home team's winning by 40 points. We're just trying to run out the end of the game. It's over. And one of the subs comes in and he's lined up off sides. Do I tell him to back up or do I throw the flag? Because if you throw the flag every time something does a little bit wrong, you're just standing there walking 5 yards, walking 5 yards, walking 10, walking whatever. But the safety fouls, unsportsmanlike, intentional, personal fouls, they always get called. But you can't, every foot fault is not a fine. It's not a consent order. And the last administration and the last director, wants to be able to, fine companies when there's been no consumer harm and the customer never understood there was a technical foul or a mistake in some number that could have been corrected. Yes, they need to correct it. Yes, it needs to be figured out and moving forward, not happen again. But it doesn't mean you need to start penalizing them millions of dollars for that.
Yeah, that's right. That's right. Now, look, I do think intent matters. I do think the context in which any kind of error or omission occurs matters, because otherwise, kind of to your point, using the sports analogy, you got to let them play. Yeah. At some point in time, the game still has to go on. You can't be flagging sort of necessarily everything, but I do think, well, depending upon what it is, of course, but I do think that the mortgage machine has to continue to operate, and we need to continue to refine it over time. We're never going to stop it. I think it would probably be bad practice to kind of stop it where there's just no forward momentum as an industry. I mean, we're 17, 18% of the GDP.
Yeah, we drive the economy.
It needs to hum.
Durable goods.
Yeah, it needs to hum. Was the deputy superintendent position in Ohio, was that a government appointed position?
Yeah, Governor Kasich appointed me. I was the executive director for the Ohio Mortgage Bankers Association at the time, and I was working with the state consistently. Chuck Moore, who was the previous deputy to me, and his team, talking to them about the state forms that needed to go away, some of the legacy things that existed from before Dodd-Frank and when it was all put together, and we had better regulation to work with, and just some of the challenges that existed between the Ohio Legislative Code. And when he was making a move to go back to the industry, he reached out to me and said, you need to take this, at least post for this and have the conversations and talk to people in the building you won't normally get to talk about. And that's when I started going through the interviews and doing it. But yeah, I served just under 4 years of that. In the last 2 years, I'd also been elected to the NMLS ombudsman position. So there's been 5 in the history of the NMLS. There's been 5 ombudsmen. I was number 3.
Oh, wow.
Oh,
wow. That's fascinating. Well, yeah, so you must know Cordry. That must have been a chilly kind of relationship.
I like Rich. I knew him. I met Rich when he was the Franklin County treasurer. One of the smartest people I've ever met. Every time I've ever talked to him and brought him an issue, he understood my points. He asked a lot of questions because he didn't get the perspective, the industry side of it always. So he always had great questions, but then he always had 2 or 3 that for me that I had to go back and research. We were on a foreclosure prevention task force back in the day. He had started the Save Our Homes task force just in Central Ohio, because as the treasurer for the main, downtown Columbus, Ohio, he saw a lot of people not paying taxes, not paying the real estate taxes that had always paid real estate taxes, and couldn't understand why, and brought it to us, and just brought all the major servicers, the major companies together to say, hey, for a HUD-approved counseling agencies, how can I help them get through to somebody so they can help a homeowner, a family in need? And if there's an opportunity for them to stay, how can we do this? And really started putting that information together. Get the phone numbers to talk to a live person and not just go through a phone tree, to really try to find those single points of contact of who is somebody to do this. And he was very smart in that. As he evolved into his opportunities, I obviously still kept talking to him and everything when he was the director for the CFPB. But, obviously on the bigger national issues, some things.
Do you think politics got a hold of him? Or, sometimes these roles you get, the higher you go, they become so political, obviously, and sometimes people on the grassroots become different people when they're now on the federal and the sort of the national stage. You think politics sort of where he got a little bit, where he lost his way a little bit?
I don't know if it was him as much. I think more that it was the impact of what he was coming from. I mean, understand, they're building the airplane while they're flying it. It's out there. They open the doors. They got, they're on short time frames of when they have to get out. Major rules, LO comp, ATR, QM, TRID, all those were that's a lot of work. And you got people doing that are not mortgage professionals. They had some help with that, but not a lot. That's why they're always, an MBA always says, there needs to be an open door. We need to talk about this. We need to have input into the process to make sure you understand what we're trying to do and how these rules and regulations can do it, and limit as much the unintended consequences. There's always going to be some, because you can never think of everything. Because again, we do the business in, geographic different markets that have different customs, different challenges. So it's difficult to do that. I fear more the political side has really taken over after Kathy Kraninger, because I think under that, yes, everybody says, under Trump 1, they didn't enforce. They enforced. They just didn't go out after, expanding rules or go for headlines. The last administration, definitely, regulation by tweet. Talk to you in a meeting at MBA secondary in New York and be our friends. And he's going to work with the MBA. And 2 days later, he's pointing at fingers at us that, we've done something. And it's just like, is that the same person? We've talked about, and I've done presentations where I've used the momentum swinging back of the pendulum. And, the bob was that ball in the middle, and it's supposed to slow down over time and find its center and just stay there. It just got worse and worse. And it just, expanding, rules and regulation beyond. And it's my fear that, this administration and what could happen coming forward, they're just going to turn that into a battering ram to try and beat more things down with it. And it's scary looking. I fear that the CFPB may never come back, or professionals that we need to work there may never come back just because of the challenges they see.
And there is a need of advocacy, or rather enforcement around different evolving programs that revolve, that are associated to lines of credit and credit distribution to consumers. Obviously, the pay-as-you-go and the affirms and the different types of programs to be able to sort of a buy now, pay later structures are ripe for abuse. They're ripe for abuse when it comes to consumers getting way over their head on these types of programs, and how they're interconnected with collection agencies and credit reporting structures, and then how you sort of assess from a capital market standpoint the assessment of risk on consumers when the definitions of credit and lines of credit are evolving. So I do think that there needs to be guidance to protect the consumer, because I don't think it's banking professionals necessarily are the ones that are going to take advantage of the consumers. I think it's going to be technology companies and other organizations that tend to be less committed from a fiduciary standpoint to the consumer.
And you talk about new things and involvement in the market. If there is no CFPB to give us a national discussion, and I think you said 52 different. If you remember the fact that like South Carolina has 2, enforcement agencies for mortgage. So does Utah. So does California. So does Colorado. There are different ones out there. If we don't, then we have all of those states trying to make up what they believe is best. And we know what's best in Massachusetts and Connecticut and the original 13 isn't always exactly what works on the West Coast or the Southeast. So CFPB and Dodd-Frank has oversight in the entity that decides, are the states enforcing Dodd-Frank and the licensing rules and all of that together. We need them to do that and more, provide, hey, here's our floor. This is what this means. We don't want states to reinterpret RESPA or HMDA at something in the future. And states have kind of done that at times. I won't go off on that path. There's a tangent I could have just gone down, and I won't. It'd be a 15-minute story, but it's a great story about a regulator trying to give some. It was actually Ken Markuson from MBA, and the regulator was trying to educate him on what HUD thought when it was writing the RESPA rule. And Ken was being so nice, and I just interrupted real quick, and I said, by the way, when you're thinking of the time when that was written, that was Ken at HUD who wrote those rules. Because they were trying to reinterpret, and it was a great discussion, but I won't go into the depth of it, but it turned out very well for us.
So, as we sort of lay the groundwork for this podcast and we move forward on this, I think, initially we'll do this monthly, and then we'll, hopefully increase the frequency to maybe twice a month or 3 times a month. What's your vision for this podcast? What would you like to get out of it? What do you think others could benefit from this kind of forum? And
I think that the initial concept I threw at you was CMBs on CMBs, conversations on mortgage banking, the issues, the things that are going on, with focusing heavily on the Certified Mortgage Bankers Society, because I think we have a lot of valuable assets, resources out there, people who see different perspectives than us, and to be able to talk about that issue and kind of come at it from a couple different angles and just find out, we're not going to replace the CMB Society and whatever, but the more opportunities we have to advocate for the things we need to be done to engage other voices, open other ears and minds to join along with us, pick a topic or two and, get a CMB on and we'll talk to them. I mean, if we need, there are so many people we could talk to just in the capital market side to talk about in the service, to talk about the, to call upon those folks and just what's going on in the world and from their perspectives, because, we have CMBs that are credit unions, that are IMBs, that are at banks. They don't all do business the same way. They all may have different opinions or perspectives. One thing when I was in the mortgage sales and sales leadership, I always said from a manager, I needed your perspective because I see it from standing in the middle. You're standing on the outside. If you see something different than me, that you need to let me know. Every time I've been on a board, I didn't want people that all agreed with me. I wanted people that had different opinions, because you can never lead the direction if everybody's telling you, yes, sir, yes, ma'am, we're doing it right. No. I use the example of Animal House. When the band's marching down and Stork takes over, it's the drum major. If we're all thinking we're doing the right thing and we go down the alley and the next thing you know, whoops, we're running into the alley, we're in trouble. You need to have perspective. You need to have intelligent minds sharing discourse. If we disagree. But, I think we agree on more than the things that we do. Let's not let the challenges we have or, the things that are in front of us, we can change them. We can make this better together.
I agree. I think this podcast, as it evolves, I think will be a great platform, because now that people have a CMB, the next logical question is, what can they do with it? Right. And I think being able to tackle issues and provide clarity to the mortgage business so that people, have a place to come to understand what's happening real time. Can you imagine if something like this was available during COVID, right? When all of a sudden people start shutting down FHA, they start shutting down, home renovation and 203Ks, and they're to be able to invite a capital market CMB to provide advice and direction as to what's happening, what he'd recommend or she'd recommend, right, for hedging and managing your pipeline, and what are some sort of counter operating techniques that you can do in servicing to be able to address it could be storms that hit the hit the country, different parts of the country. Oftentimes there is a lack of direction when crisis hits, and then everyone just picks up the phone to try to figure out, who, the competitor, who's doing what, which competitor is responding what. The one thing Scott Everett did a good job once. He got he got attacked by like a Ukrainian or a Russian, hacker, in his Encompass. His Encompass database was, I think, encrypted, and he was basically held hostage. The company shut down for 3 or 4 days. And one of the things he did after he had resolved the matter is he published it in the Chrisman, Rob Chrisman's commentary, and said, "Hey, if anyone wants to learn from what we just went through, jump on." And he had 100+ people jump on this video conference to talk about what the negotiation was like, what the transition process was, how he determined the detection of the hack, how he communicated with the consumers as a result of the hack, like the whole entire process. It was so beautiful about how the industry sort of came together. But that's the kind of thing that we can do, I think on this podcast, is provide that kind of direction, and I think in the months ahead, I think we'll, with the people we have on it, we'll be able to provide that.
Right. And provide more insight into the community, because one of the challenges you as a new CMB and new CMBs as they come on, you don't know who is there. You don't know everybody. You don't know what's going on beyond. Your first window into the society itself is once you get the pin. Otherwise, you don't get inside. You don't get into the CMB community. You don't see all the resources that are there, the copies of things that we've done in the past. I hope we can do all of this. I know we have hefty goals. Love to hear, more people. I see a couple of CMBs commenting already right now. Get different people in, talk about different products, programs, and how it impacts, and how we can all, join together, CMBs and the mortgage world, to make our world a better place. And that, I put in, stuff, making the world better one loan at a time or whatever. That's the mortgage world.
Yeah. There's no question this is going to be I think a powerful podcast, and, it's going to take some time to get some momentum, and we're going to do that. But no, this has been great, Bob. Your leadership's amazing. One of these days we're going to get you to showcase your tattoo that you got of the CMB. You don't want to do the great reveal just yet.
No, it's right there.
We got to wait.
Right over my heart. It's right there, close to my heart.
And I'm looking forward to continuing this conversation on this platform for the Mortgage Podcast. So this has been great. Thanks for doing this.
Thank you, Rick, for picking up and willing to do it. Obviously, I don't do a ton of these. I'm very happy. It's very easy to talk with you about this and to understand where we're going. So I look forward to the challenge and what we can do with it.
That sounds great. Well, this is episode 1, week 1, concluding of the Mortgage Podcast for 4 CMBs into the industry to talk about, regulation and legislation. But thank you. And this is a wrap. Thank you, man.
Thank you.